Hi, my name's Jim Scott. I'm with Team Scott Homes, and I've got one of my preferred lenders here, Mr. Tyler Beard with Fairway Mortgage. And he's my go-to guy when I'm constantly getting bombarded with a bunch of refi questions. Is now a good time to refi? What should I be looking for when deciding to refi? And if you can help me understand who should refi, and how do I determine when I recoup my closing costs? When do I start saving money, per se?
Yeah, well, Jim, I am super happy that we were able to jump on a quick Zoom call together. We always
Amen.
love working with you and all your clients. And you're right, you're asking a super big question. So, and I have everyone revisit their 5-year plan. Hey, what are my goals? What are my bills? And what would we like to accomplish? A
Right.
5-year period makes it very simple and easy. So, who would want to refinance today? Anybody who is potentially over a 4% interest rate would want to consider refinancing today their home mortgage if it fit into their 5-year plan. So the reason I say the 5-year plan again is you might be getting ready to leave that house. So if you were to say, no, you know what, we're probably going to sell within 10 to 12 months, does it make sense? I would say no. And even if you
Right.
said, would it make sense for us to refinance, but we're going to sell in 2 years? I would say no. Your benefit would really be, could you see yourself being in this home for 5 more years or holding on to the home for 5 more years? And let's take a look at what the
Yeah.
Smith family would have done a couple years ago if they got a mortgage rate. And let's look at this. So if John Smith was one of our clients 2 years ago,
Okay.
he would have bought his house at this time probably about 400,000. That would have been a very normal price for him.
Yep. Yep.
The average rate during May of 2018 was 4.8%. You can
Okay.
Google it, say, hey, what were interest rates 2 years ago? It will pull it up. An average rate was roughly around 4.8. So let's just say John got a deal and he got 4.75% interest when he got his home. So
Okay.
John, being a first-time home buyer, put 3% down for his
Okay.
down payment. So what would his original loan amount been? So if you put 3% down on a $400,000 home, it would have been $12,000 down payment. That would have made his loan amount at the time $388,000. So let's fast forward a little bit. So we're 2 years down the road now, and it's May
Okay.
20th, and John is considering refinancing.
Okay.
John would roughly owe 2 years down the road $375,000.
All right.
His estimated property value would be roughly 441. And how do I
Wow.
come up with that number, Jim? It's if we were to look at our market and even the national average, obviously it's been a lot higher than this. But just
Yes.
for being a little bit more secure and using some lower numbers, let's just say properties went up 5% over the last 2 years. So year over year, it was 5%. He would have a value about 441,000, and he bought his house only for 400. He is up $41,000 in equity. Look, so John came and asked us today for refinancing. What would his options look like? So if we were to look at the next 30 and 60 days, I think it would be very realistic for John to potentially get as low as 3%. Like, look, super crazy. He's almost 2%. It's a 1.75% in savings. So his current monthly payment is about $24.37 right here.
Okay.
So he's at about a little over $2,400 payment. If he were to refinance, he would drop as low as $2,053. And that's only over a short 2-year period of owning. And he would have roughly $384 in savings. But let's just say, look, what if John were to refinance and he just didn't time it right, and he were to lock in, it would be, let's say it's 3.375% for an interest rate. So he would be looking at $300 in savings. Jim, you asked the question before we started this, what what would his actual savings be, right? So we would be looking at, there's cost. Everybody knows there's cost in these loans.
Correct.
Average person who refinance spends about $3,000 to $3,500 on just closing costs. Those are normal fees for the mortgage company, for the title and escrow company to do all the paperwork.
Appraisal.
That's normal costs. They're fixed. Doesn't matter where you go. It always ends up being about the same. And if we were to say, so John's decided to set up an escrow account. So he's going to pay his taxes and insurance monthly. So he's going to pay it with his mortgage, so he doesn't have to pay it on his own. We will collect that escrow money at closing. But the good news, Jim, is this. Since John has equity, he will actually be able to wrap that cost into his loan. So he'll go from a $375,000 loan to about a $380,000. So it's about $5,000 difference in his new loan amount. So what would be the cost though? What's the actual savings? So that kind of doesn't sound great for most people, right? $5,000, you're gonna reset the clock. Well, if John were to keep his house for 5 years, Jim, he would be at about $23,000 in savings between his old monthly payment or his old monthly payment of $2,437 and his new monthly payment of $2,053. That would give him about $23,000 in savings. So your recoup time is, if you were to keep this home for 15, 16 months, your break-even point would be 15, 16 months down the road, and everything else would just be technically cash in the bank.
Hit National Bank, baby.
Yeah, it's a virtual bank, and you'll be saving that money so you can pay down other debt and with the extra savings, or apply that money to pay off your mortgage early. In my opinion, if John were to ask me, in my opinion, if he says he was going to be in this for 5 years, I would tell him to go for it. This would be a really, really good, phenomenal option for him. But if he's going to sell it in 12, 24 months, I would just tell him, hey, you know what? Just talk with Jim. I think you guys should get your place ready for it being sold here over the next year or two, and don't refinance. I don't believe in refinancing for the sake of it. I know a lot of banks and mortgage bankers and loan officers, they just love refinancing because they want to get paid, but it doesn't make sense. We want to help clients. If this makes sense for them, great. We're here, and we would love to help them and earn their business.
So that was kind of my other question. I was wondering is what you thought foresaw in the next. I mean, I realize the markets are what they are.
I would say that families that want to take a look at refinancing, it's probably going to be good now and until the end of the year.
Wow.
And regardless anyone's political views, we're in an election year, and when we're in an election year, things get artificially held lower than they're supposed to be. So regarding interest rates,
okay,
so I would say we probably have a really good run between now and November. And with rates being as low as they are, and maybe we'll have some other dips a little bit lower along the way, and people would have a super phenomenal advantage by refinancing.
Okay. And then so for the folks that may be interested in, I'll put your contact information down below on the screen.
Yep. Yeah, that'd be perfect. And if you guys want to reach out, again, my name is Tyler Beard. I'm the branch manager here at Fairway Independent Mortgage. And you know what? You guys can personally reach out to me via cell phone or via text. And that number is 425-931-7050. Call me, text me, shoot me a message, even if it's over the weekend. I'll probably respond. I'll pull away when my wife doesn't realize it, and I'll get back to you. And we would love to talk about, some options, or if this is even a good option for you and your family.
From the beautiful shores of Lake Stevens, ha! But until then, your home, our passion.
Yep. See you guys later. Thanks, Jen.
Take care. Bye-bye.